Welcome back. Hope you're having a good Monday morning. Well, as promised, Prakash Diwan, market expert, joins us on the show. Hi, Prakash. Hope you had a rocking weekend. Well, but the earnings weren't so rocking. Let's talk about the big boy from the banking pack, Kotak Mahindra Bank. Out there were two disappointments. One was on the credit cost, which was higher than expected, and the other point was on the NIMs. The contraction was higher than expected. Obviously, it recovers in the coming quarters. But what's your view on the stock?
Good morning, Nigel. So I think, the numbers from Kotak are actually ambivalent. I mean, it depends on how you look at it, what lens do you use. The NIM compression, of course, has been explained very clearly because of the shift largely from unsecured to secured loans, which is good. And then if you actually see the pre-provisioning operating profits is actually very good. So what's happened is they've probably been a bit overcautious again, kept some money aside, provisioning is slightly higher. And they've talked about that, stress in the CV portfolio, which they'll address. So I think it's, while there is disappointment, it probably is very well set to kind of take, benefit of the credit expansion that would probably happen in the next few quarters. Maybe not this current quarter ending September, but beyond that as the festive season kicks off. So I think I would believe the numbers aren't so bad. And what do you do with the stock? If you have a slightly longer term orientation, I think an opportunity to buy could emerge on dips basis sentiment, which probably is going to be weak today. So it's definitely stronger than before in terms of what it gives you on the risk reward. I'm not saying the numbers are strong, but the risk reward is probably much more, in favor of the reward at this point in time.
Prakash, any thoughts here on TCS per se as a stock for our viewers this morning?
So I think, Prashant, this was kind of inevitable. We could see it coming. Large cap IT's been sluggish in terms of most metrics, particularly growth. Now in hindsight, of course, we can surmise a lot of things out of this, saying the cash should have been used for some smart acquisitions, promising futuristic acquisitions in AI and robotics and all. And mind you, there's lots that's available in Europe, particularly. Ask any investment banker, and there is a significant deal pipeline, although a bit smaller for some of these large companies to dabble in. But they'll have to rework the strategy, and maybe if it's not AI, it's about a mismatch, a skill set mismatch. Keeping a bench like this is going to get redundant. So this is going to happen to other companies also. So the signal is some of the other largest companies will also have to rethink on their strategy in terms of the bench. But TCS, I think it's most of it is priced in. There's been disappointment on a lot of counts in the last month or so, including the numbers. So I don't think there's too much of a reaction except for a sentimental dip which you could get in the markets.
Yeah, let's see. Prashant, on the point that it should be largely viewed positive by the market, but there are the outliers as well. For instance, I was looking at what Jefferies is saying. They're saying in the near term, this cut could lead to execution slippages and higher long-term attrition as well. So, we'll see how this plays out. But yeah, mathematically speaking, you just save on salaries. And that to that extent, obviously, it's
based on this, the point is, should you trade TCS based on this news flow? My answer is no. I mean, it just sparks a larger debate, which is what we're having in terms of, and that debate that we had on
But what is the future sort of direction?
Yeah, so based on this, I mean, if you really are focused on taking a trade, I mean, that's like a bit of a forced thing.
Absolutely. Prakash, hi, morning. Like I said, Tata Motors has been struggling for a year. Now that there is good news finally on global tariffs and what should explain the interlinkages for their top models, JLR models, any point in being a buyer with this kind of a decline?
So, I think Tata Motors, you rightly said, it's you need to look at it as a global player. There's no more much of, what they do in EVs and CVs and all here. And from that perspective, one of the biggest bugbears for them is also China. So if JLR sales, elsewhere in Europe and all take off and things start looking up, you also need to make sure that the Chinese competition doesn't kind of impact them at some point in time. Right? So it's happened in the US, but because of the tariff uncertainty, there's no clarity in terms of where they'll probably land up in terms of market share and all. So, if you are okay with digesting the ups and downs, the volatility in the, underlying business, it definitely is a great story. Other thing that's going to happen is as they kind of get to, leverage, enjoy the debt-free or nearly debt-free status, things could look very different than what they've done for the last few years. And that balance sheet kind of will start helping them grow in certain pockets much faster. So yeah, it's a good story, but very long-term in terms of orientation is what you need.
Okay, all right. Thanks a lot, Prakash, for joining and giving us all those views. Good day ahead and chat up with you during the course of the week.